Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Friday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is the 4-hour chart of gold USD in front of us right now. Before I proceed, I would like to make an announcement that next week I will be out of station, so I will not be able to upload any videos. And again in the month of June, I'll be going for a break of 1 month. So in the month of June, there will be no videos because yes, I'm going for a break. I'm getting married. Anyways, let's get started. So this is the 4-hour chart of gold USD. So yesterday, as per our expectation, the level of 1890 to 95 acted as resistance, and we made some profit also when market reversed from this particular level here. But second time when market went up again, we saw that market was bullish and market broke the resistance, the minor resistance. And as you can see that right now market is standing at 1904. So let's discuss the chart of gold USD first. So if you look at the chart of gold USD, then you can see that I have marked these arrows. So these arrows signify that market is unable to cross the previous highs, the failure of the market to cross the previous highs, or in simple words, market is constantly forming lower highs in the market. Lower highs signify the rise in number of sellers. Okay, so still we cannot consider this as a bullish market, or still we cannot consider this as a complete trend reversal here, because for a proper trend reversal, always keep in mind that we need a V pattern in case of a downtrend market, and in case of an uptrend market we need an inverted V pattern. So in the chart of gold, still we do not have any V pattern yet, and market is constantly forming lower highs in the market. So as long as market will be forming lower highs in the market, just keep in mind that this is a seller's market. And in a seller's market, as we all know, that sell on rise is the best strategy. Sell on rise. Okay, this will be the best strategy as long as market will be forming lower highs in the market. But this time, if we try to understand the body language of the market here, or try to understand the emotion of the market here, then we can see that unlike the previous times, just listen to me carefully because this is a little bit complicated. Okay, so please listen to me carefully. If we try to understand the body language of the market here, then unlike the previous time, this time buyers seems to be strong. Okay, if we compare with the previous recovery, then this time buyers seems to be strong. As a result, we can see that after reversing from the 1895 level yesterday, market went up again. So whenever you see something like this, market reversing from the resistance and again going up, okay, so whenever you see any scenario like this, okay, it signifies that buyers are not ready to surrender, and there are new buyers in the market, नए buyers market में हैं, who are trying to break the level. Okay, so in this market we have some buyers right now, and as a result market seems to be bullish right now. But as we do not have a V pattern yet, so we cannot consider it as a trend reversal. So if you are in a buy position right now, if you have taken a buy position, just make sure that you are not going for a big lot size. Okay, you are not going for a big lot size, and you are using proper risk management, because this is still a seller's market if we follow the trend of the market here. Okay, so what are the best trading opportunities here? First of all, I would like to talk about the trend line. You can see that the trend line was acting as the dynamic resistance, and right now market is standing at the trend line only. But though the market is standing at the trend line, but we can see that the market seems to be very strong right now. Okay, so as a result, taking a sell position right now is not a good decision. After all, we must keep in mind that no level is permanent in the market, and trend lines are weaker in comparison to the static support and resistances. Okay, so market will be testing, probably market will be testing the previous resistance here, the previous swing high of 1911 to 1910 here, or 1908. Okay, this was the previous swing high. You can see. Okay, again, listen to me carefully. See, if you just try to watch these candles here, you can see that the price has been rejected. Okay, sharply. Market tried to move up, but market failed to cross the high. Okay, so whenever there is a price rejection for hours and hours, okay, whenever you see the price is unable to cross the level and there is a complete price rejection for many hours, it signifies the presence of sellers in the market. Okay, so whenever you will see price rejection means presence of strong sellers in the market. So right now, if we look at the present candles here, then yes, there is a high chance the market will be testing the level of 1911 to 1908 level, and it will be a, we must observe first. Okay, we must observe the market first, because if the same bullishness continues, okay, if the same bullishness continues, then obviously market will break the break the pattern of forming lower highs in the market. जो pattern follow कर रहा है उसको तोड़ देगा market. See, this is the pattern right now forming. Okay, so right now market should have gone down, but you can see market is very bullish right now. So if market reverses from this swing high, okay, if market reverses from this swing high, we can take a sell position. Okay, we can take a sell position, but yes, confirmation will be important for us, and yes, there is a possibility also that market will be reversing from the swing high here. But as we all know, no level is permanent, so please be very much strict, very much strict with the risk management. Okay, and please follow discipline. And if you see price rejection just like the previous times, if you see price rejection from above, if you see a shooting star kind of a pattern, bearish pin bar pattern, bearish engulfing pattern, then you get the confirmation that yes, market, okay, market is still facing the selling pressure. Sellers are still present in the market, and you can take a sell position. But yes, confirmation will be extremely important. But in case the same bullishness continues in the market, then market will break the resistance. Okay, market will break the resistance, and your next selling opportunity will be around 1920 to 1921. This will be your next selling opportunity. Why this selling opportunity here? Because first of all, we have the Fibonacci 38.2% retracement level. See, we have the Fibonacci 38.2% retracement level, and at the same level, at the same level, we will also have the 50 moving average also. So we will be having two resistances, first in the form of 50 moving average, second in the form of Fibonacci 38.2% retracement level. Okay, so if market breaks this particular level here, then yes, there's a high chance, high possibility that market will be reversing from the level of 1920, 1921. If market reverses, again, if you see price rejection or any reversal sign at the resistance, you can take a sell position. But just make sure risk management is extremely important, because the only thing a trader can control is the loss. Okay, and a trader should always be ready for any bad situation in the market. Follow proper risk management. No analysis is correct in the market. No analysis 100% accurate in the market. Sorry. Okay, so this is where you can take a sell position in the market. And the third selling opportunity will be around 1935, 1936. Okay, around a 200 moving average. This is your third selling opportunity. If some extreme bullishness comes in the market, this will be your third selling opportunity. Okay, and if market starts falling, then the previous buy position will, sorry, previous low of around 1972 will be important. As of now, to be honest, I do not see any proper support in the market right now apart from 1972 level. Okay, if I take in the 15 minutes chart, okay, in the 15 minutes chart, we can see that the trend line is acting as support, but trend line on a 15 minutes chart is not a very reliable level. If you are an experienced trader, if you have been trading for some time, if you see market bouncing from the trend line on the 15 minutes chart, then you can take a buy position. But yes, experience and risk management and stop loss is your risk. Okay, but because gold is already a very volatile asset, and trusting gold on a 15 minute time frame requires some sort of experience. So you can use the trend line also for a buy position, but as of now the only good support I see is around 1872 to 1873 level. If market comes down to this level, we can expect some kind of reversal or bounce. If market bounces from this level, definitely a buy. But in case by next week when I will not be available, if market breaks it and market starts falling, then we can take a sell position as well. So whatever you do, risk management is the most important thing. Okay, keep in mind. Bye bye. Take care.